A reverse mortgage must be a first mortgage. So when you get a reverse mortgage, if you have an existing mortgage or home equity loan line of credit, that's going to be paid off first from the reverse mortgage, as well as if there are any liens or judgments on the property. Now, Don, you said that the reverse mortgage makes a portion of your home's value available. Yes, that's all home equity loans make a portion available. If you had a $500,000 home, and you went to get a loan from your bank or lender, are they going to give you $500,000? No, because they would have bought your house. And I asked the lady, well, how much money do they give you? She said, I don't know, 100, 200, 300. I said, what's the criteria? And she didn't know. I said, well, let me tell you what a traditional lender looks at. They look at a square. They look at your income and your assets and your debt ratio and your credit score. And based off of that, they say, we're going to give you this much money at this percentage. That's not what we do. I'd like for you to draw a triangle if you're watching, because when we have our consultation afterwards, should you decide to go forward and you're meeting with myself or my team, this triangle is going to come back. And so the amount of money that the federal government through their program is based off of these things. Number one, the age of the youngest spouse. Someone has to be age 62. Someone has to be age 62. The spouse can be younger. So it's based off your age. Number two, it's based off the value of the home. The value of the home. And number three, it's based off the expected interest rate. Now, that's a federal term. That means the future projected interest rate. So we take those three things. We send it off to the Federal Housing Administration. They send us back a number in the middle of the triangle. And that's called the net benefit amount. The net benefit amount. Now, a reverse mortgage must be a first mortgage. So underneath the triangle, any outstanding loan balances are going to get paid off from the middle of the triangle. And what's left over is one or two things. Either a line of credit is left over, or sometimes there's not enough money in the middle to pay off your outstanding loan balance. That's called short to close. We've got some options when that happens. But typically, you have money made available. We subtract what you owe, and the line of credit is made available to you. I hope you wrote that down on your triangle. So, Don, how much can you get in a reverse mortgage? That varies. That varies every Tuesday. The interest rate comes out every Tuesday. So here, these numbers are probably a few months old. So if you had a $600,000 home and you were 65 years of age, $200,000. Now, today it's a little bit less, but interest rates are coming down. Don, if I had a $400,000 home and I was 75, $157. Again, today it's a little bit less, but interest rates change every Tuesday. So those numbers are coming